Welcome to episode 64 of Let's Talk Bitcoin, a twice-weekly show about the ideas, people, and projects building the digital economy and the future of money. Visit us at letstalkbitcoin.com for our daily guest blog, all our past episodes, and of course, tipping addresses. My name is Adam B. Levine, and this show is about the inevitability of change. In the months and years to come, I suspect we'll be talking about distributed applications more and more. And if David Johnston and Ron Gross have it their way, they'll be built on Mastercoin, which is itself built on Bitcoin. The bulk of today's show is my talk with Ron and David about this major evolutionary step from cryptocurrencies to crypto equities and beyond. But first, the gang's all here. Stephanie, Andreas, and I finally get a chance to talk millibits. Is it time to change? What even is a millibit anyways? It's another long one. Enjoy the show. I recently listened to the first episode that we actually ever did of Let's Talk Bitcoin. And one of the conversations that we had on that first episode was about whether or not it was time, at the time the price was $100 per Bitcoin or so, to move from the Bitcoin as the primary unit that people trade to something that's smaller. Because Bitcoin, even though there are only 21 million coins that can ever be created, each of those coins is divisible. So you have the ability to get really granular with how you look at this currency. But the question is, does it make sense to do that yet? And so now, we're here and the price is up above $1,000. And I think it's worth having that conversation again, guys. Do you think it's time to move away from using Bitcoins as whole units, or do we still have a way to go?
Absolutely. I think that the current price of Bitcoin is an impediment to mainstream adoption. I don't mean to imply that people are dumb or can't do math or anything, but they see it and they get intimidated. Well, I have to divide this. How much is it? And it's just much easier to use something like Mbits. But actually, Adam, now there are people talking about directly switching to microbits or even just Satoshis.
Okay, so if I have one Bitcoin, what does that look like in these other denominations? What does one Bitcoin look like in micros, and what does it look like in nanos? And what do we even call them?
Right now, we've got a really good and easy to use exchange rate because 1 millibit is basically $1. So if you have a Bitcoin, you have 1,000 millibits, and at current prices, that's about $1 per millibit. Now, if you go to microbits, that simply means you have 1,000,000 per Bitcoin. And that means that each millibit has 1,000 microbits, which are worth 1,000th of $1.
So one Bitcoin is 1,000 millibits or 1,000,000 microbits. Okay, so then at $1,000, again, I went back and I listened to this episode and I basically said at that point that I thought $1,000 was about the point where it made sense for us to make this change. Because like you said, 1 bit cent or no, it's not bit cent. It's a point zero. Man,
I
guess this is kind of the problem. Yeah.
Yeah, exactly. So a millibit is $1 and that makes it a lot easier to handle. And even if it rises and a millibit is $2 or even $3, if it rises in value,
it's confusing.
we can keep going that way. So it's easy to grasp as a millibit. It's much harder to do as a Bitcoin. To Stephanie's point, the other big issue right now is that the vast majority of people I talk to who are new to Bitcoin don't understand that you can buy fractions of a Bitcoin. They think you have to buy a whole Bitcoin and they can't afford that. And in fact, you don't. So you can literally go out and buy $1 worth of Bitcoin. And so if you have a buy and hold strategy, which is a strategy I follow every Monday, I buy Bitcoin, whether the price is up, whether it's down, whether it's sideways, I don't care. Every Monday, I buy Bitcoin and I buy as much as I can afford based on the spare dollars I have. And sometimes that's a whole Bitcoin when I'm doing okay or when the price is low. And sometimes it's only, 0.1 of a Bitcoin or 0.01 of a Bitcoin. And that's fine too, because it adds up. Shift this perception that you have to have $1,000 just to get in. And that's absolutely not true.
To quickly address your previous point, Adam. So the price of Bitcoin is now at $1,000 US. $1 equals 1 millibit. When the price of Bitcoin goes up another 3 orders of magnitude, then it's going to be $1 million per Bitcoin, and $1 will equal 1 microbit. Is that math right?
That math is correct, but it doesn't have to be Bitcoin that goes up. Don't forget that the dollar is also going down.
So it's all relative, but it matters how we describe these things. Like you said, Andreas, people think that you have to have $1,000 just to get into Bitcoin, and it's just simply not true. And I think that actually relates to the popularity of certain altcoins that really don't have a lot of infrastructure. What happens is people hear about Bitcoin and they say, oh, geez, $1,000 for a Bitcoin. I can't afford that. I better get something less expensive. I'm going to look at Litecoin. I'm going to look at Feathercoin. I'm going to look at PP Coin. As a result, we're seeing a big altcoin rally right now, and I think this is the reason why.
A Bitcoin can be divided to 8 decimal points after the point. That means there are 100 million subunits, which are called Satoshis. So 1 Bitcoin, 100 million Satoshis underneath that. The reason this is important is because throughout the Bitcoin network and protocol, what is being transacted is in fact Satoshis, not Bitcoin. The units are always expressed in integer values, not floating point values. And as integers, they're denominated in Satoshis because most financial systems can take very large numbers, but they can't take too many points after the decimal in terms of floating point numbers. So when you transact 1 Bitcoin on the network, it actually appears as a 100 million Satoshi transaction. What's interesting is that another way to look at the exchange rate is as the purchasing power of a dollar. So right now, a dollar can buy you 100,000 Satoshis. And, a couple of weeks ago, a dollar could buy you 300,000 Satoshis. So if you were paying attention, effectively, you're looking at your dollar losing purchasing power against Bitcoin. And at some point, it's going to buy you a lot less than 100,000 Satoshis. I would very much like to see inverse tickers that instead of showing you the price in US dollars per Bitcoin, they show you the price in Satoshis per dollar, so that you can actually see the vanishing power of your dollar.
Well, actually, there's an app called Bitcoin Paranoid that I use on my phone because I am Bitcoin paranoid about the price. And it actually shows the inverse price against the US dollar. So if you pull it up, it'll say $1 equals 0.9 millibits or something like that.
Right. It really needs to be in Satoshis because it's a lot easier to view. But yeah, that's exactly the point. We need to start thinking about the inverse because after all, that also represents the fact that the dollar and other currencies are losing value, not as fast as Bitcoin is appreciating right now. But the sentiment goes both ways. People are flocking to Bitcoin because it's attractive and new and different and because of all the media, but they're also escaping from national currencies for the inverse reason.
Do you think people would be freaked out though? Like if we started talking about Bitcoins in terms of, wow, with $1, you can get, how many Satoshis?
100,000 Satoshis.
100,000 Satoshis. If we started saying with $1, you can get 100,000 Satoshis, wouldn't people start to say, I don't know. This sounds like a scam. I think it's funny money. You're playing with the accounting. I mean, the psychological stuff is so important, even though it's completely irrational, right? It's so important when we're thinking about the future of money.
Yeah, I would say that the best way to do this is to keep within the psychological parameters of daily spending. So if you have a currency, then buying a single inexpensive meal or a cup of coffee should cost between 1 and 10 units of that currency. That makes sense to people intuitively. What that says to us is that we need to go to millibits right away. If we're smart about it, we should actually even be thinking about microbits. Otherwise, we're going to run into the same problem next year.
The Bitcoin QT client has had built into it for a while. There's a little box you can check that says show the prices in millibits. Mm-hmm. As far as I know, it doesn't have microbits built in yet, but that's a great point. Do we go directly to microbits? Start talking about Bitcoins instead of whole Bitcoins as microbits. That requires a little bit of PR and a little bit of people adjusting their frame of mind. And I'll say it was strange for me when the price was rising rapidly. Andreas, like you, I also purchase a little bit of Bitcoin every week, usually on the order of about $100 worth of Bitcoin, no matter how much the prices. And I remember, a couple months ago, $100 was getting me about 1 Bitcoin. It was really strange to look at that and see I'm only getting zero point 0.1. Actually, I'm getting less than 0.1 this week with $100. It's just weird to adjust your frame of mind. So it does take a little while to sort of rebalance your attitude towards how you think about Bitcoins and their value in terms of how much some amount of Bitcoin can get you.
We don't need a large centralized campaign, though, although we do have to adjust this new reality. But every one of us can change the client, whether it's an online wallet like blockchain.info or it's basically a full Satoshi client. You can change it to Millibits right now today and start getting used to it. I did that several months ago, and mentally I've been operating in Millibits, and it's been a lot easier to handle this sudden increase in value because it seems more intuitive to me. So I would urge our listeners to just go and flip that setting to Millibits. The bigger question is whether that should be the default setting on at least the Satoshi reference client. And that's a discussion that's been ongoing on the developers list now for a couple of weeks. I expect we will see some changes in the next release.
Yeah, I mean, just seeing it on a daily basis seems like the best way to get accustomed to it and get used to it. Is this like the opposite of what happened in Zimbabwe with the hyperinflation? It's almost like hyperdeflation. We're having to adjust our units by orders of magnitude in the matter of just a few weeks.
I wouldn't call it hyperdeflation because this is not driven by deflationary forces themselves. It's really being driven by adoption. So it's hypergrowth of the currency's economy. That's what's happening. The Bitcoin economy is growing with leaps and bounds right now. And I think almost $8 billion has been fueling into Bitcoin over the last 6 weeks. $8 billion added to the Bitcoin economy, and the result is the price where we are today. But yes, this is exactly the opposite of what you see in Argentina, what you see in Zimbabwe, what you see in countries that are dealing with hyperinflation. This is hyperdeflation, and it leads to hoarding, and that's the other thing we need to be concerned about.
Oh, well, that's a big philosophical question, because what's the difference between hoarding and saving?
Well, it depends on whether you're a Fortune 500 consumer-oriented corporation or a saver. You call it hoarding if they're not buying your product, basically.
I think that this is actually a myth that, I don't know, I feel like we're going to bust over time because, again, this is one of those personal statements. I think that I've never had a problem with the currency being deflationary. I've had a lot of different income levels in my life, and the times when I've been most willing to spend are the times when I felt like I was most able to spend because I was confident in my financials. So as the value of Bitcoin goes up, I think that there are a lot of people out there who are holding it, who are now more comfortable spending it than they were when it was worth less because they have more. I mean, right?
Unless they expect it to rise another 10-fold or 100-fold within the next couple of years. And that's the risk. But, that kind of extreme growth, which comes from rapid adoption, won't last. It will last only for a couple of years. And if for the beginning period of Bitcoin, it becomes really a deflationary store of value rather than a fluid means of exchange, we're only going to see half the benefits of adopting this currency, but that's okay because then the rest will follow once it stabilizes in terms of growth.
So I'm curious, have either of you, since the price has gone up to over $1,000, made purchases within the Bitcoin economy?
Yes, absolutely.
I continue to pay contractors, buy services, buy products. But what I am doing increasingly is whenever I can, if I do have to make a purchase in Bitcoin, I try to immediately do a dollar to Bitcoin conversion to keep my Bitcoin reserves at the level they were before. So I'm reluctant to reduce my Bitcoin reserves. I am hoarding a bit, but I'm doing that by essentially buying more while I'm spending it, not by stopping the spending.
That's basically what I'm doing too, Andreas. It's really interesting that you should mention that because, yeah, like as the price has gone up, it didn't used to be that I would replace the Bitcoin, but now more often than not, I'm using Bitcoin to spend it for the discount I'm able to achieve by doing that, and then buying the Bitcoin back through my normal means and actually saving a bit on that, but not actually having the reduction in my Bitcoin holdings. That's an interesting point.
Something else different, something has changed for me in the last couple of months. I've gone from about 10% of my income being Bitcoin to about 30% of my income being Bitcoin last month. And by the end of this month, 75% of my income will be Bitcoin. By January, 100%. So I am basically not making dollars anymore. I will be making all of my income in Bitcoin as of next month. That is a really radical change for me. It puts me 100% in the Bitcoin economy on both ends. And that, I think, will change my hoarding behavior. If I'm able to earn it in Bitcoin, then I'll be less reluctant to spend it. And who knows if I'll have any surplus US dollars. I may end up not having any at all soon.
I'm with both of you guys in my purchasing habits. I tend to replace the Bitcoin as soon as I spend it too, because I don't want to decrease my reserves. And now what you just said, Andreas, made me think of, there's a famous book called...
You mean Your Money or Your Life by Vicky Robin and Joe Dominguez.
Basically the concept of intensive saving. Joe grew up in kind of a poor neighborhood. He was from New York City. And what he did was have a high paying job. He saved 75% of his income, or even more. Like some people do intensive saving with 90% of their income if they can. And what you do is you just kind of live like a student or a very simple lifestyle for a couple of years, even though you have a high paying job, and save most of the money. And over time, you're getting a return because you've invested your savings into assets that grow over time. Pretty soon you can retire after, some people say the formula is if you save 75% of your income, you can retire after about 8 years of working this way and doing this. So it's definitely a strategy that people use to attain financial freedom. With Bitcoin, if you're making 75% of your income in Bitcoin, and the way that you treat Bitcoin is to treat it as though it's a savings account or something that you're saving and that you're not really dipping into, you're effectively doing that.
Well, I won't be able to do that for very long. I still have expenses and I'll have to either dip or find ways to source dollars separately, or I'll have to convert. My landlord will not take Bitcoin for rent. But even if they did, I'd have to spend, yes, not yet. I would have to spend some Bitcoin to do that. Here's the other calculation I recently made. Just a few weeks ago, I purchased a motorcycle. And that's a fairly large expense for me. It's a one-off expense, and it's not something that I had planned and saved for. And so one of the questions in my mind was, do I buy with Bitcoin, essentially converting Bitcoin to dollars to pay for this? I could have paid for it 100% cash to purchase it, or do I finance it? And I looked at the finance deals, and basically for US dollars, I could finance it at less than 5% a year over 60 months. And meanwhile, my Bitcoin return is currently 5,000% a year. So it would be absolutely foolish for me to spend Bitcoin when I can finance something at a very low percentage rate on US dollars that don't really give me any return. So essentially, I get a much better rate of return in my Bitcoin, and I finance with US dollars. And I made that choice not to purchase with Bitcoin, but instead to do financing. So I think you're going to see that as well. It's currency arbitrage.
At this point, what makes sense to do, and this is funny because people haven't really had these incentives, I think, in the lifetimes of people who are our age. What makes sense to do now is to take out a line of credit and buy Bitcoins, and then a year later, sell 10% of them and pay back the loan or something like that. Right.
It's incredibly risky to do that, of course.
Yes, absolutely. But I know people who did it last year and they're looking pretty good right now.
Yes, exactly.
And I actually have a similar story on this vein. So I have a kind of poor internet connection out here, which sometimes causes problems for the quality of the recordings. So I have very limited options as far as internet access is concerned. And one of the things that I do have access to potentially is a dedicated T1 line. But the only way that I can do that is by essentially committing to a 3-year long lease that'll run about $20,000. So I was thinking about this because I need the connection at this point because the instability is causing real problems with trying to record the show. But what if I took that $20,000, set it aside right now, and put most of it into Bitcoin, and then paid the first few months out of the dollar reserve, and then essentially just started selling Bitcoin with a couple of month lead time in order to pay for it. And I wonder if by the end of that, again, if we are on this deflationary trend, then I should wind up with more money at the end of this than I wind up with than I put into it at the beginning, and I still get the service.
It's even better if you don't have to start paying it back until if it's 6 months interest free or whatever, you know?
Right. Right, exactly. But I mean, like, there are all of these, like, it seems like there should be companies that are offering this. They're like enabling this and letting it so that you can, you know, put, I don't know. It feels like this is an area that hasn't been developed at all. And there's so much room that could be done to develop it. But I want to tie back around to our conversation because we've really gotten off the rails here. As far as how we look at Bitcoins, whether they be one Bitcoin is one Bitcoin or one Bitcoin is 1,000 millibitcoins or one Bitcoin is 100 million Satoshis, right? 100 million?
Yep.
Okay, 100 million Satoshis. Is it appropriate now for a show like Let's Talk Bitcoin to start looking at Bitcoins as millibitcoins, or should we go to nano Bitcoins? Because I mean, I think that by the end of the year...
No, there are no nano Bitcoins. There's micro Bitcoins, but nano would be 0.1 Satoshis.
I'm sorry, yes, nano Bitcoins. I'm terrible with this vernacular. My God, I'm so bad at this.
I think everybody is.
It's almost as if it's all Greek to you.
Dude, so I don't know what we do about that, but it feels like, you know, it feels like the way that this is going to happen is by shows like Let's Talk Bitcoin that actually have a decent amount of reach into the space, kind of making this decision and then starting to have us talk about it in a way where that's the normal thing. And that's how it'll get to be normal for other people. So do we think that if $1,000 is the new normal, is now the time?
Yeah, it's a plateau and we should switch to millibits in our discussions right now. The alternative is to do some kind of imperial unit where each Bitcoin has 12 farthings and each one of those has 60 shillings. No, never mind. Let's
the peak
scrap
of efficiency. That. Okay, yeah. Okay, great. Well, I think I'm down with that too. I think the millibitcoins makes sense for me, and maybe that'll increase our donations. Man, we should talk about donations at some point. We haven't even talked about that in like 30 episodes.
Oh, yeah. Maybe people could send us a few millibits or 1 millibit. We would really appreciate it.
Yeah, that's actually been a really interesting thing. Let me just mention that real quick. So again, like Bitcoin, if you have a short-term time frame, it's really, really volatile. But if you have a long time frame, then it's not so much. So one of the really interesting things is that the common amount of Bitcoin donations that we receive on a, you know, per person basis has fluctuated from, it started off at about 0.01 and then went down to 0.07. It took me a long time to figure out why that was. I think it was $140 for a while there. Whatever the price it was, that was about $1. And so now the average amount that we're getting is like 0.002 or 0.001. But I'm actually really okay with that because those tips that we got in the first days that were 0.01 are now worth what, $10 each? I mean, like, again, like the multiplier here is so good that if we don't need to spend it, that, I mean, it's so worth it. So even if you're like talking about donating a very small amount, you know, the only real consideration as far as I'm concerned as to whether or not it's worth your time to do it for us is yes, it is. But if the transaction fee is large. So, I mean, that's the thing is I think that the transaction fee issue is really going to be forced by this price increase. I think that there has to be an adjustment coming to that with 0.9 because they can't not at this point. It's very expensive.
The other day I went to see if I could edit a wiki page on like the Bitcoin wiki. It was about something like merchants who accept Bitcoin. And in order to do that, you had to, as an anti-spam mechanism, they use this thing called Bitcoin Verify or something like that, where you send a small amount, ostensibly, of Bitcoin to an address to prove that you're a human being. Well, the small amount that they wanted was 0.01. And yeah, like back in the day, that was a small amount, but it's not anymore. It's $10 just so you can edit a wiki. So I said, no.
Yeah, I mean, and that was something else that it really... It's hard to price in Bitcoin. I just had this conversation with one of the editors that we work with. We've been basically updating the price as the price has been going down, and it started at 0.5 Bitcoin, and then we went to when that was like $50, and then we went to 0.25, and then 0.125, and it kept getting lower. And so we finally just agreed on just a US dollar price at about $100 per episode worth of material, which is a great price, incidentally, paid in Bitcoin. But yeah, I mean, like, it's just really crazy right now trying to do commerce, trying to conduct business on anything other than a right now. Okay, I can see the price is that we're making the exchange right this second. You know, those exchanges are still easy, but anything that has any sort of time element to it is really crazy.
I just don't think we're there at the point until we get a little bit more stability where people can price their goods and services in Bitcoin yet. I want that to be true. Like I've been wanting to price my voiceover services in Bitcoin for the longest time, but it's not practical yet.
Yeah. And it costs you customers is the other thing. I mean, it makes it more confusing. I think in the new year, let's make that adjustment. And from January 1st on, let's aim to talk about this in the Millibitcoin sense, so long as we stay above $1,000 per Bitcoin.
Right. So
by the new year, we might be using microbits.
Yeah.
Does that mean the show changes its name to Let's Talk Millibitcoin?
No, it means we've become a much more exclusive and expensive brand.
Right.
Exactly.
When you shop with Bitcoin on Gift, you can get gift cards from over 200 retailers. Think of the possibilities. Not only is your holiday shopping taken care of in a snap from your Android device or on the web, but now you have a way to purchase everyday items from stores like Target, CVS, Gap, and GameStop using your Bitcoins. That's not even the best part. When you shop with Bitcoin on Gift, you get 3% back. Ready to shop? Visit gyft.com today.
Happy holidays from Let's Talk Bitcoin. If you like the work we're doing, we appreciate Bitcoin tips of all sizes at letstalkbitcoin.com. Just as importantly, share the show with your peers and review the show on iTunes. Don't be kind, be honest. LTV reaches nearly 10,000 listeners, but has less than 50 reviews anywhere I can find. I'd very much appreciate your help in remedying this situation. Thanks for listening. I used to think that cryptocurrency had room only for one. After all, with borderless, cheap-to-use, transparent, yet still private, and very divisible internet cash, there isn't much you can do to improve money besides that. It turns out crypto isn't just about currency, and it can be more than cash if we have the vision to see the future and then bring it into being. Today we're joined by David Johnson, Executive Director of BitAngels, and Ron Gross, the Executive Director of the Mastercoin Project. Gentlemen, thanks for making the time.
Thanks for having us.
Adam. Our listeners have heard about Mastercoin before. I spoke with project founder J.R. Willits towards the end of the fundraising period. Before we talk about that, though, a few days ago, you sent me a white paper that you both are co-authors on, along with some other people, called The Emerging Wave of Decentralized Applications. Using Bitcoin as an example, can you explain how Bitcoin is a decentralized application?
Sure. This is basically a framework that I've been trying to develop with Ron and other people at BitAngels to explain really what this new entity is. People have different names for this. Some people would call them decentralized autonomous corporations. Some people call them cryptocurrencies. But I was trying to get at what the actual function is. And so most people in the end of the day are going to end up interacting with this as a piece of software, right? It's something that they download onto their computer. An IT professional loads it onto a server. And at the end of the day, I use this as a software application. I really do think that's the most useful frame for this. And of course, decentralized is the big differentiator from a typical application. And so in the white paper, I really go into detail and try to offer some useful terminology on how these decentralized applications have to be built on open source, how they have to operate autonomously without one person controlling a majority of their tokens. And I propose that they ought to all have records maintained in a cryptographically stored decentralized blockchain. And so it's a pretty broad definition, but as we see more and more of these type of entities, I think it's helpful to have that language to really describe how they work, how they issue their tokens, how they operate. So I'm excited to explore today the possibilities I see, like you said, going beyond just Bitcoin, which I see as the baseline protocol layer. I'm mostly interested in building applications on top of Bitcoin. So you mentioned Mastercoin, and we can get into that in more detail later, but I see it as a great first example of a protocol that's getting built on top of Bitcoin, using it essentially as a back end for time stamping and a universal token system, and the ability to send these tokens around and adding new user layers and functionalities. And so I describe in the white paper sort of the idea of describing this as a type 2 decentralized application because it's building on top of these baseline proof of work. You have the blockchain. That's a baseline type 1 decentralized application, but we can build on top of this, right? We can store metadata in the blockchain, which is actually a lot of what inspired me to write the white papers. We've had this great update as part of 0.9. I don't know, Adam, if you caught the number 5 update that Gavin did to the Foundation's blog that covered provably prunable outputs.
Yeah, I did catch it. Before we go into that, let's take a step back real quick and talk about tokens for a second, because you mentioned tokens a couple of times. And this is a really important differentiation, I think, that a lot of people don't really understand. When you talk about Bitcoin or Bitcoins, when you talk about it, with a lowercase b, you're talking about the tokens, right? You're talking about the actual Bitcoins. But when you're talking about Bitcoin, uppercase B, that is the Bitcoin network or the Bitcoin protocol. And the tokens are essentially, they're tokens that travel that infrastructure. But ultimately, they're called the same thing, but they actually are very different, right?
Exactly. There's two sides of the operation, and a lot of people get confused when they first enter the ecosystem and think the network is the same as the tokens that traverse it.
If the tokens Bitcoins are different than the network Bitcoin, are they both distributed applications, or is the Bitcoin network the distributed application and the Bitcoin tokens are the things that are redeemable and essentially power the network?
That's a really good question. I would probably lean towards saying that the distributed network that underlies Bitcoin is the decentralized application. And as you said, you have this token that is used to access the features of this particular type of application. And so when you create a new layer and a new protocol, you have a different application. And again, you have an associated token that can access its features, sort of like you need a specific token to access any other type of application on the internet. It's just here we have a finite number of tokens.
Okay, and so when you're talking about layers with regards to these like protocol layers, that can be thought of like the base level of the internet is TCP/IP. That's the base communication level that's essentially going on at any given time. And then there's the HTTP layer that's essentially built on top of that. And that is where we find the modern internet that, you have Facebook and modern web applications built on. They're not built explicitly on top of TCP/IP. The layer that they're built on exists and runs on top of TCP/IP, and then they're built on top of that layer. So by this definition, could you call something like Facebook a type 3 built on top of a secondary layer of TCP/IP?
Yeah, that's a really good way to think about it. Or could also say a browser is a type 3, right? So you have TCP/IP, you have HTTP, and then we've built all these things on top of HTTP, browsers, search engines, social networks. But they all exist at that same level.
So are these additional levels, or are they more levels? Are they just all type 3s?
I think of them all as type 3s. And so that's the analogy that I use in the white paper, is if we thought of the operating system as my type 1, right? Here's the baseline. Or we use that operating system as the baseline. Then you have all these companies that operate in different tech stacks, right? There's the Google and Amazon and Facebook, right? They all have their own individual tech stacks. And then on top of that, most of the applications people interact with are inside the marketplaces of those tech stacks, right? That's just another example of sort of layered operating systems and protocols that work together, right? An operating system, a particular tech stack, and then let's say it's the Apple tech stack. You have hundreds of thousands of user applications that are offered on their marketplace, right? And that's sort of all level 3. You can think of Apple as that level 2 and the operating system in which they're operating as level 1.
Okay, so then tying this back around to Bitcoin, taking Mastercoin as an example here, Bitcoin would be the layer 1. It would be the type 1 because it's built just on top of nothing. It's just an edifice out there in space that people can use for what it's used for. And then Mastercoin, which is the project that you guys are working on right now, is a type 2 built on top of Bitcoin. And then you're hypothesizing that Mastercoin is the equivalent of the web browser in this case, and you'll have additional applications built on top of that'll use Mastercoin's infrastructure, which uses Bitcoin's infrastructure.
Right. That's a good way of thinking about it. And the reason I think it makes sense to build on top of Bitcoin instead of creating a separate blockchain is a couple of reasons. You have the security advantage immediately being on top of a network which has enormous hashing power, and thus doing a false transaction or double spend is impossibly costly, right? I remember it just recently crossed $1 billion on calculation to do a false spend on the Bitcoin. So you get that immediately, right? If I was creating another type 1 decentralized application that had its own blockchain, and we're mining at day 1, you don't have that security advantage. And so I think that's probably really important to build on top of. That's a big advantage. And that gives you a lot of stability on which to build on top of it. But you don't need to do mining again now that you already have this base layer. And so versus proof of work, Mastercoin and similar applications are working on a proof of stake. And so based on the number of coins and tokens somebody holds, they can vote on protocol changes and things like that. And instead of rewarding hashing power and confirming transactions, which are really positive value-added behaviors by the users when it comes to a type 1, you can incentivize different behaviors by users for a type 2. So for instance, with Mastercoin, it's basically been incentivizing two different behaviors. First, there was the Kickstarter period, you can call it, right? The 30-day, those that want to support these particular features can add in funds to a particular Bitcoin address, and they will get part of the initial tokens that are generated. And then there's a second pool, which most people forget about, which is the developer pool. And it's rewarding anybody that provides open source contributions to the project with dev Mastercoins. So there's these two different pools, and you're incentivizing two different behaviors. One is to initially provide the funding so all of these things can be developed and the implementations can be built. And then second, in the long term, it's a controlled algorithm where 50% of the dev coins are handed out the first year, and then 25% the second year, and then 12.5% the third year, and so on and so forth, right? Sort of emulating that Bitcoin distribution over time with the dev coins. But I think those are different buckets you can think about these incentives in.
Is there any difference between dev Mastercoins and actual Mastercoins? Like, were they created differently, or are they just, were they allocated?
So I think David and I and a few other board members have different perspectives about the functionality and the division between these types of Mastercoins. At the end of the day, these are both Mastercoins, and they're both fungible and interchangeable, right? The only difference is that the normal Mastercoins were created by sending money to the Exodus address over the investment in August. And the dev Mastercoins are generated throughout the rest of the project lifetime, the exponential decay that David described. Now, the dev Mastercoins are currently managed by the group of people known as the Mastercoin Foundation, right? And they're managed by us with the explicit purpose of being used in order to develop the protocol. But technically, and from a financial perspective, two types of coins are the same.
I actually kind of followed the Mastercoin project, and I'm not that familiar with the dev coins. Is there somewhere in particular where I could find more information about how that allocation happened or what the rules are there?
Yeah, the rules for that allocation were there in the original spec, in the original white paper. They were called reward Mastercoins back then, but we renamed them to dev Mastercoins, and then Willett described the original allocation algorithm. We are refining that right now with David just pushing the exact semantics, but nothing has basically changed.
So we've talked kind of around Mastercoin for a while here, and I'd like to actually focus on that for a second. At a really basic level, can you tell me what the purpose of the Mastercoin project is and has been? What is the goal that you guys are working towards actually solving?
Well, one of the things that got me really excited about this is the community, the Bitcoin community. As long as I've been in it the last year and a half or so, there's been a demand for, we need a decentralized exchange where we can buy and sell all these digital tokens. And we've seen throughout time all the centralized versions, whether it's BTCT or others, they come and they go. And so if you offer smart property tokens, these exchanges don't stick around very long. And it's because they're run as centralized entities, and they can't manage the regulatory burden globally. And so it's been recognized by the community for a while. We really, really need a centralized exchange. And so when I saw that was basically the first feature, and it was pretty straightforward technically to implement that with Mastercoin, that's what got me really, really excited. I can't emphasize the importance of that enough, because once you have a decentralized exchange that is completely open source and the records are kept in the Bitcoin blockchain, those records aren't going anywhere. They're secure, they're safe, you don't have to worry about another centralized exchange closing down. And from a regulatory perspective, because there's no entity, because there's no centralization, the burden goes to those use particular jurisdictions to say, oh, okay, I can use these smart property features, I can use these tokens and this decentralized exchange in this way in my jurisdiction. And it doesn't have to be a global solution. You can come up with unique solutions, just like in Bitcoin, right? There's no Bitcoin company. And so people have been free to set up exchanges in their particular jurisdictions, however they have to do that. And so it's different in the United States than it is in Canada, than it is in Germany, than it is in Japan. And that diversity is really, really key, I think, to making this work. And so decentralized exchange, to me, was one of the very first features. That's what the current bounty, the $250,000 300 BTC bounty, is focused on, is the decentralized exchange. I think it's under testing right now. People can go and check out the developer thread. They can check out what's going on with that and test it out, download the wallets. And that's really exciting to me because it gives us a whole new range of capabilities as a community.
So when you say decentralized exchange, the problem we're talking about here is the one trading dollars or yen or whatever your local currency is for Bitcoin, right? Is it an exchange for Mastercoin, or is it an exchange for Bitcoin, or is it just an exchange?
What David said about, all these kind of smart property features on top of Bitcoin or Mastercoin, that's very much correct and true. I just want to say that back at August, we didn't even imagine these features. J.R. Willett, for the last year and a half, when he worked on the protocol, only focused at first on the currency and commodity exchanges. He described the protocol where people can issue their own currencies, and be it either US dollars or yens or euros or gold, and then the same unified exchange platform handles all of these exchanges, all of these currencies and assets. It was only 1 or 2 months ago when we added the smart property feature, which now we're discovering it's a very important part of this ecosystem, right? If before we were more like a Forex sort of platform, now we're also a stock exchange. People can issue these tokens, this smart property, and just exchange any type of financial asset. And we keep imagining and coding and defining new types of assets from the financial system into this system, right? Once we cover the basic ground, now we can move on to futures and options and various other types of contracts and bets. If I make a bet on top of the Mastercoin protocol, now this bet is a financial asset, and I can sell this bet off to someone else if I'm not satisfied with it. So the exchange is like the unifying holy grail here that just binds everything together. It's like the force.
So this is more about tokens being traded for tokens. So I can sell Bitcoin for Mastercoin. And that's once I have Mastercoin, I can interact with any of these user currencies that have been created on top of the Mastercoin protocol, which is really, really exciting. Though I do want to make one clarification. We talked about earlier the dev Mastercoins and they're being vested to the programmers. I want to point out that this is one point of centralization that we really don't like about the current implementation, this process needing to be managed by the Mastercoin Foundation. And so what we're striving to do is, number one, we've put a bounty system in place where anybody can compete for this. Number two, we're working on a proof of stake system so that all those that are in the Mastercoin community can vote with their proof of stake based on the features and the bounties that they want. And so our goal over the coming months is to have a distributed bounty system and completely remove Mastercoin Foundation from the equation and have the entire process with the bounties using proof of stake run by the community as a whole. And we see that as one of our really, really important objectives in the coming months. And Ron could talk more about that. He's the one that originally proposed proof of stake and is a big advocate of this distributed bounty system.
Before we get into that, proof of stake is in place because you don't have the incentive structure of mining, right? You've right. bypassed this by using Bitcoin as your infrastructure. They do mining on Bitcoin, so you're secured by that. Is there anything you're trying to accomplish with a proof of stake system besides giving people a way to give you feedback? Because that's what you're using it as primarily, as like the more you have, the more your voice counts.
It's a way for us to control what versions and new protocol updates are made to the clients. Because in Bitcoin, right, if a new update 0.9 is pushed, a majority of the nodes have to accept this new version. Otherwise, there's a hard fork. Well, we need the same kind of function, right? Because we have an update to the protocol. How do we know all the stakeholders want this update? We're using proof of stake for that.
We said the phrase proof of stakes a lot of times so far. So it's important for me to make it clear that proof of stake isn't necessarily the very same concept of proof of stake as it's used in peer coins or in other currencies. In peer coin, proof of stake is used as an actual mining device. You commit your coins and you generate new coins by proving your stake. So we're just inspired by them, and maybe we'll incorporate some of these same ideas later. But right now, we're using proof of stake as just literally proving your stake in the project. The users prove that they own coins, but they don't generate new Mastercoins out of that. Instead of generating new coins, the users can affect the protocol in two key ways. Right now, we have our funds, both Bitcoins and Mastercoin, and we're holding them. The Mastercoin Foundation is holding these coins, and we're allocating them in order to develop the protocol and promote it and develop the websites and various other needs. So instead of us doing this allocation manually by board vote or in any other way, our goal is to move all this decision process into the users themselves. So users will see all these kinds of votes for budgets or bounties, and they will be able to approve or deny any bounty that they see. Right, and thus they can control all the funds that are locked away in the protocol. This is the one aspect, managing the funds. Another aspect is just managing the protocol, right, and deciding what Mastercoin is. So David talked about how miners in Bitcoin sort of vote with their hash power, right, and decide how the protocol goes. That's part of the equation. That's not the complete story. For example, if all miners, or if 75% of miners in Bitcoin decided to keep minting new blocks, which each of them having 50 coins instead of the current 25 coins, that change wouldn't have happened, right? Because there is an economic majority here, and users have to accept this change as well. But the key thing is that mining is still a very important part of the decision process that defines what Bitcoin is, right? If there's a new patch that is maybe controversial, like Gavin's patch last year, so miners can use their hash power to decide this. And in Mastercoin, the equivalent is voting with your Mastercoins. So if you own a certain amount of Mastercoins, you can see which protocol changes are coming up, and you can choose which ones you like or dislike and vote on this accordingly.
EasyDNS is the Swiss Army knife for your domain names, helping meet their customers' individual needs since 1998. EasyDNS has been an outspoken critic of SOPA and CISPA. EasyDNS was an early supporter of Bitcoin, and now they are proud to sponsor this show. Do business with a company that shares your values. Get a 13% discount when you pay with Bitcoin. Go to bitcoin.easydns.com and be sure to use discount code LTB.
Hi, this is Jason King for Bitcoin 100, and you're listening to Let's Talk Bitcoin. But you know, Bitcoin is not really a talker. It's a doer, just like the best nonprofits and charity organizations. And at Bitcoin100.org, all we do is find hardworking nonprofits and charities and give them $1,000 in Bitcoin. That's all we do. So donate to Bitcoin 100 and let Bitcoin, nonprofits, and charities do what they do best.
If mining is an attempt to do an equitable distribution of decision-making authority based on how much work or money you're willing to invest through the mining process, then this is essentially the same thing, except instead of having to make a continuous investment, you just have to acquire the Mastercoin once.
Well, yeah, it's sort of equivalent to mining, but we're not generating any new Mastercoins in this process, right? It's just a decision-making process. If a Bitcoin miner can decide, for example, on which fees they want and what sort of transactions to accept, so a Mastercoin user can decide how the protocol evolves, but they're not trying to generate any new Mastercoins. The amount of Mastercoins that will ever exist was generated in August, and there's no reason to generate any more.
So how many total Mastercoins were generated in August, including the dev Mastercoins and the ones that were funded in?
So the number is about 600,000. Maybe David can remember the exact number. It's in our FAQ. That's about the amount. I think about 9% of that goes to dev Mastercoins, and those will just be distributed to the community.
Sure, I can give you the numbers on that. There were a total of 619,478 Mastercoins put into existence between August 1st and August 31st. Now, most of those were through people contributing funds to the Exodus address. Specifically, that was 563,061 Mastercoins were bought via the Exodus address. And I'm just pulling these numbers off of MastercoinExplorer.com and MasterChast.info. There's lots of links on mastercoin.org to all the different parsers and explorers and wallets. And so the difference between those two numbers, the 563,000 and the 619,000 is 50,000 or so dev coins. And the way that the protocol works, if you read the protocol, basically when anybody sent a Bitcoin to the Exodus address, they generated 100 master coins. And it was completely open, right? Anybody could send as many Bitcoins as they wanted to the Exodus address and generate these coins. It's an open process. But protocol also details that for every 10 coins that were generated, 1 dev coin was generated. And that it would be set aside and distributed using this algorithm over time, 50% the first year, 25% the second year, 12.5% the third year, and so on, in order to incentivize developers. And so those are the two pools. As Ron said earlier, they're interchangeable, they're fungible, but they were all generated at the time of the Exodus address, and that's the cap. There'll never be any more.
It's amazing to me we've gotten as far into this interview and I haven't actually asked this question yet. What can I do with a Mastercoin?
So the immediate thing and the very first feature is the distributed exchange. And so that's what is getting built out first. As Ron was describing earlier, that's kind of the baseline function that makes most of the other functions of Mastercoin work. So if I wanted to sell Mastercoins for Bitcoins, I can now do that with this distributed exchange. Now that's interesting, but it becomes really useful as soon as people begin issuing tokens on top of Mastercoin using the user currencies. Now all of a sudden I can use my Mastercoins to buy into API coin and host coin and compute coin. I literally know of more than a dozen planned decentralized applications already that are planning to operate on top of Mastercoin as the smart property and the user currency features come out in the next few months. And in fact, I had a lot of fun this weekend. I went to a 72-hour hackathon called Startup Weekend. It's actually a global event hosted in 100 cities. And I worked with a team of developers this weekend to build API Coin, which I used some software from a company that I built and run called Engine.co. And we open sourced a bunch of the code we had done around API aggregation, data normalization, basically making it really easy for developers to use a lot of different APIs. That's a service that exists out there, right? There are companies like Singly and Mashup and others, but they're all using a centralized network type of approach, right? I have to pay them per call. It's not open source. So if they've got bugs, I can't fix it. If they don't support the APIs I want, I'm out of luck. And so what we said is, look, we can use this new token system, this new user currency system that Mastercoin gives us to issue a token for API coin. And anybody wants to access this new API engine application can use API coin to do it. And it's completely open source and it's completely decentralized. So anybody can download the code and offer the API and compete on price for the market to offer this API to people that want to use it for developers to build applications. And so it was an incredible weekend. We built the API layer. Anybody can go to apiengine.co, check out the white paper, check out the GitHub repos, all that kind of stuff. We moved quickly enough that people were building applications on top of API Engine this weekend. And we actually ended up, I'm very excited to say, we won the competition. There were about 100 people there, ended up forming into about 13 teams. And the judges thought this way of monetizing, creating this token and using it for the operations of the application was so novel that they gave us the winning ticket. And so just an incredible weekend. But there's a lot of those applications. I know people doing protocols and white papers for a host coin, right? Where you have this coin on top of Mastercoin, and people are providing hosting power and they're competing to do that. And they're using this token system to offer that service. And I know people working on compute coin, which is a little more complex and difficult to offer compute power for something similar. I know people doing arbitration coin and insure coin. And so there's all this incredible variety of applications. And that's why I titled the white paper, The Emerging Wave of Decentralized Applications. No joke. We're going to see a lot of these type of applications come out in the very near future as the Mastercoin features get flushed out, debugged, and really scaled up, first with the decentralized exchange, and then right after that with smart property and user currencies.
You guys aren't the only people working in this space. And the other kind of competitor in the arena is Invictus Innovations with their distributed autonomous corporation concept. And it seems like you guys have very similar projects, just with like different approaches towards basically the same thing. Am I correct in identifying these as very similar, except that it seems like they view everything as a type 1 and you view that as inefficient because then you have to reinvent the wheel each time. In your designs, it's preferable to start from a type 2 built on top of a type 1 and then have all of these other individual coins be type 3s on top of the type 2. Is that the logic here? Why that's the preferable way to go?
We know Dan, we know the team at Invictus, have a lot of respect for them. It's funny. I was actually writing my white paper at the time in which they released theirs. And I thought they did a really good job of describing a lot of the ethics and a lot of the possibility around this. Where we differ exactly is really just implementation. And it's a question of, okay, we ought to build this on top of existing blockchains, therefore we don't have to reinvent the security wheel, and there are other advantages but it's also, I think, a really important question of language. I put this in the paper, I put it in the appendix. The biggest word in their terminology that I really can't agree with is the idea of a corporation. Corporation, it's a useful framework, but it has so much legal baggage. It has so much historical baggage. It has so much legacy meaning for the state incorporated version of what they're talking about. I'm really very reticent to use that term because I think you're going to drag in, without meaning to, a lot of regulatory and compliance issues that don't exist if we're just talking about this is a computer application, right? There's no company, there's no employees, there's no profit, there's no revenue. None of that stuff exists, right? All of that is legacy of this old corporate structure. If we can build an entirely new model using these tokens, then I don't think we run into nearly as many regulatory issues as if we're trying to recreate the corporation with this old vestiges of how it used to work.
I personally am not, a big legal guy or politics guy, and I know David is focusing on the differences between our approach and their approach, but maybe the terminology. But all in all, I think both of us, we have this roughly the same goals, right? Of fighting decentralization or fighting centralization, or providing an alternative and infrastructure to build decentralized applications or corporations or whatever you call them. Personally, I was really inspired by them, okay? Because at first, when Willett started working on the paper, and even later on when we started adding the new features, I think that Mastercoin is an exchange platform, right? That's its primary function, just being a platform where people can exchange types of value. But then we started adding these new kind of features of voting on spec changes and voting on budget allocation and various other features. And I also, concurrently with that, at the same time, I started looking deeper into what Invictus is doing. And I realized that they have this vision of decentralized autonomous corporations, and they're sort of building that top down, right? They know that where they want to go, and they're identified a few key components of that infrastructure, and they're building those components one by one. And I think that we are actually doing the same thing, but from a bottom-up direction. We are already a decentralized application, right? As David described, we were doing all this sort of stuff, and we have the Mastercoin tokens, which are useful and used for the Mastercoin application. So we're building all these infrastructure components for ourselves. So the natural extension of this would be to allow other companies or other ideas or entrepreneurs or developers, whatever you call them. So you allow all these people to use the same infrastructure that we built for ourselves to run their applications. So we're doing the same thing. We're just approaching it from two different directions.
Right. I mean, it seems like this is really the direction that cryptocurrency, do you call it cryptocurrency anymore? I guess it's just crypto assets at a certain point. Something like Bitcoin is cryptocurrency, but something like these, like the futures markets or, the betting markets, it's not the same, is it?
Yeah, well, it's technically a cryptocurrency. Like everything you run on top of the internet is TCP/IP, and at some level it's lower protocols. But the currency aspect sort of blends into the other decentralized token system aspect. As I said, I'm not a big semantics guy. You can look at it from different aspects. Maybe it's both a currency and an application and tokens. It's up to the user and the specific use case to decide.
One last point about the Invictus to Mastercoin comparison. One of the words that they put a lot of emphasis on is autonomous. And I think that based on our conversation, you guys also, the Mastercoin project is also moving towards very autonomous operation. But I noticed that that's not something that made it distributed application doesn't say autonomous explicitly in it. Is there a reason for that?
It's really just a question of we're trying to come up and coin a term that can be used by a broad enough audience. And so if it's 3 words, it really just becomes an acronym, right? So it becomes a DAC very quickly. And so if you think of terms that are widely used and understood, and this was a lot of contributions by Steven, he's really the branding guy. And you think of something like social media. That's a term that emerged to describe a certain set of applications. And you had one word as the anchor word, right? Everybody understood what media was. And the new characteristics is social media, right? And that became to describe, the Facebooks and the Twitters of the world. Right. And so thinking about it in that frame of how do we speak to a broader community with a easy to understand term, we thought about applications as the good anchor word, right? Everybody knows what an app is, right? Thanks to Apple's commercials, right? There's an app for everything, right? So everybody knows an application. They use applications, they use software, very familiar word, good anchor word. But you want a second word that is the descriptor. And I think decentralized can encompass autonomous. And actually, in the white paper, I explicitly include autonomous as one of the things it has to be in order to qualify as decentralized. So it has to have a token system. It can't be controlled by a central entity. And that's sort of the definition of autonomous. It has to work on top of these blockchains that are themselves distributed. And so, yeah, absolutely. I love autonomous. I love distributed. I love decentralized. And I think we agree on all those aspects.
Right. It's just about making it into a marketable term that can actually catch on.
Right. Because, things like crypto don't have a lot of currency, pun intended, outside of the Bitcoin community, right? That crypto sounds like something scary. It's something to do with, cryptography. I don't understand this. And so I don't necessarily know if it's the right thing to go out to the mainstream with. And so we're trying to really how do we coin the term for what these things are? And so decentralized applications or simply distributed apps or distributed applications for short or for informal use, I think is a good way of describing the concept we're all talking about, but in a way that people can understand, right? It's an application. It's not just a regular application. It's decentralized. It's not controlled by a central company, which means it's built on open source and it has these tokens and no one person controls it, right? So I think that's a really useful frame to explain this in. And that's really easy to get your head around.
I think that in Bitcoin and in cryptocurrency, broadly speaking, there's a temptation to solve problems because they are problems that would be better if they were solved. But that doesn't always necessarily jive with our legal system around the world. Satoshi Nakamoto, the anonymous creator of Bitcoin, disappeared, I believe, in at least partly because, standing beside such a disruptive creation can only conceivably cause trouble for the individuals who did the creating. In your paper, you talk about open source as a legal model to follow. Do you think that this would have offered enough protection for Satoshi? And are there any scenarios where you don't view open source as enough protection for starting something disruptive?
That's a really good question. And this is a really important question to what we're doing at the Mastercoin Foundation. So we're actually assembling a team of legal experts as an advisory board and a legal director. We've already initiated the search. We're reaching out to different legal experts in currency and cryptocurrency on different regulations. And our goal is to really, sort of set the tone and really lead this conversation and proactively, not reactively after something happens, and say, look, here's our view from a legal perspective. And we think it's well-founded. And I do think open source is a really good model from a legal and regulatory perspective to follow for these things. And, for Satoshi, he was doing something incredibly new, and he was doing it essentially starting just as one guy, right? And he got the crypto community excited and then broader hacker community excited. But I think we have a much broader base that we're starting on because of the existing Bitcoin community. I mean, everybody involved in Mastercoin, they're Bitcoiners, right? So they get the terminology, they understand what's going on. And so we have a much broader base. And my hope is, we can do this in an open and transparent way. We ought to be smart and we ought to do things according to the rules. And we encourage everybody at the Mastercoin, know your jurisdiction. Know what you can and can't do. Don't do things that aren't acceptable in your jurisdiction. And we think that this gives people a tool set. Having this, new protocol gives people a tool set to build it however they need to build it in their particular jurisdiction. And that's, I think, the real key is you have a centralized solution And then you have to do compliance everywhere, or block IPs, or this and that. This is just a set of open source software, and anybody can use it to build it in a way that works inside of their jurisdiction. Some jurisdictions will be very friendly, like Germany has been to Bitcoin, or China has been to Bitcoin, but some jurisdictions will be less friendly. And that's inevitable, but having that diversity of implementations, I think, is really, really important.
We talked about a couple of Type 3 distributed applications that are in development or that are coming, and they were all kind of technical. Compute coin, API coin, all of these things. I mean, I think I have a okay understanding of them, but I know a lot of our listeners won't. These feel almost like they are also layers of infrastructure that will have things built on top of them. Are there any end user products that are actually being developed that somebody like me, who isn't necessarily building a website or anything, would have a use for? Is there anything really interesting up front right now that doesn't need to be built?
I'm not aware of any group trying right now to develop this, but I can see this coming very quickly. And that's the idea of a social coin, right? And then there are a few other groups doing infrastructure, but this is something that every user can understand, right? It's the decentralized version of Facebook can be built on top of Mastercoin and then these other layers. You would have a decentralized application, decentralized social network, where you would need a social token in order to create an account, in order to log into your account and to use it.
Are there applications where once they're built, there'll be something that a normal person would want to use as opposed to a service would want to build on top of? Because like Compute Coin, you're going to build on top of that, right? Someone comes along and they build on top of it and create something. I mean, right?
Yeah, that's correct. But I have the vision of one key user-facing application that could be built on top of this is social coin, right? A decentralized social Facebook, a social network. We've seen already in the last few years decentralized social networks such as Diaspora try to come up and bootstrap themselves. I think the key difference that tying a currency or tokens into that system can help is to just build in the monetization model. Just like Mastercoin got the funding required to develop the protocol by issuing the tokens, Mastercoins, then the social network, the future social network, could get the funding required to build the infrastructure and build and maintain the infrastructure components by tying itself to a coin. And these coins, these social coins, would be required to use the network, just like any other decentralized application. And this is not something that a specific group is working on right now. It's just an idea out there. But I think it's really powerful, and then that someone should pick this up and just run with it.
So for an example like that, again, going back to this idea of whether or not it's more efficient to use an existing infrastructure like Bitcoin and Mastercoin or to create an alt that does something entirely different, isn't part of the reason why mining is powerful from an incentive standpoint because the users get something for essentially free, right? There's no buy-in. It's just about attention and devoting your hardware to something, as opposed to like if you're talking about a social coin built on top of Mastercoin, someone actually has to buy the portions of Mastercoin in order to use the network, right?
I don't see mining as free at all. I think you're devoting your software to it, right? It's a proof of work, and then the work doesn't come free, and then today it doesn't even come cheap, right? You buy these dedicated hardware boxes and use them.
Well, for Bitcoin you do, but that's different for every coin that comes out.
Yeah, I mean, every coin has their own issuing mechanism, but the issuing is never free. You either give some stake or some CPU power or some hardware, but it's always tied to a physical resource. And also today's social networks, their monetization model is exploiting their users basically, or their data, and selling that to advertisers, right? That's pretty much explicit. There have been relatively few attempts at building products that really cater to the user. But with such a social networks such as Social Coin, a user could simply buy a coin that would maybe give him a lifetime supply or a lifetime access to this network. This is simply an alternative way to fund this effort.
So does everything trade against Mastercoin then? So do all of these user coins trade against Mastercoin and then Mastercoin trades against Bitcoin?
Yes.
So there are not fixed prices for user currencies. User currencies float against Mastercoin, which means that everything stays in balance regardless of the price.
Yeah, correct. I think one thing that we should emphasize, it's important to understand that Mastercoins per se are not required to issue any of these smart property or decentralized applications. You don't need to own a lot of Mastercoins or any Mastercoins to do that. You just issue them in a certain way, and you just pay the Bitcoin transaction fees that are required. But the new currencies are just created, and then you trade them in exchange for Mastercoins or whatever derived currency you want. But you don't have to own Mastercoins to do that.
So you accept Mastercoins from other people who want it, right?
Yeah, you can accept Mastercoins. You can also accept Bitcoins in a way that, like, Mastercoins can be the bridge between Bitcoin and all the other currencies.
Right. That makes sense to me. The bridge, Mastercoin is the bridge, makes sense to me. I'm trying to figure out if Mastercoin is actually necessary there, or if you can just trade Bitcoin for something else. I mean, I guess there's not really a reason why you couldn't. There just needs to be an exchange that supports them both.
Yeah, we're not aware of a way to build a decentralized exchange without the Mastercoin tokens, right? Or there are ways, but they're theoretical,
right?
And they haven't been built. Mastercoin also serves an important function in the contracts for differences, which we haven't discussed, right? And that's just a way.
Right, that's the prediction market, right?
No, that's even before prediction market. Prediction market is taking a certain bet and then waging off or selling that bet off. The contracts for differences is just you and I or any two players in the system can make a contract that basically means that both of these players take positions on whatever asset they want, right? And that's really totally unrelated to the smart property feature. That's an entirely new area of Mastercoin. And the Mastercoins have value because they financially secure this contract, okay? And it's sort of a circular logic, but it works.
It's pretty incredible. I've been an entrepreneur for 12 years and I've built 6 technology companies, and I've never seen something grow as fast as Mastercoin. I mean, the number of developers that are getting involved. Before the fundraiser was done, somebody built buymastercoin.com and had an exchange, a private, manual exchange to buy Mastercoins at, right? Before I could go and set up the Twitter feed, 3 other people had set up the Twitter feed, right? Because there's no central plan, right? All these stakeholders participated and everybody's just doing things that benefit this. It's just pretty incredible to participate in because people are adding sort of all different types of value all the time. I mean, contracts for difference is an incredible example. The original spec talked about escrow-backed currencies, and it's sort of one of the more experimental and maybe this will work, maybe this won't kind of features of Mastercoin. And it was one of the people that was providing criticism to that suggested contracts for difference, which we realized was a really, really good, already proven mechanism to do what we wanted. And it ended up got it included in the spec, right? Because that was community feedback. Like, here's a better way to do that same thing. And so, the pace of evolution of the protocol and all the improvements that have been made, it's just been pretty incredible. I mean, we're less than 100 days in, and we've paid big bounties to developers, building the distributed exchange. We're adding new features and new technology based on a lot of input from the community, and dozens of people are already building new tech on top of it. So it's really cool to participate because it's the fastest growing project I've ever been a part of.
It's conversations like these that lead me to believe that Bitcoin is the foundation of the cryptocurrency movement rather than its crowning achievement. If listeners would like to learn more about either Mastercoin, BitAngels, or the broader classification work that either of you are doing, what are the best ways to do that?
There is mastercoin.org for all the information about that project. There is bitangels.co for the BitAngels group. And if you want, it's now up on GitHub to read the decentralized application paper, and it's all open source. So give me pull requests, help me improve it, and I welcome input on the idea.
And you'll be able to reach that by letstalkbitcoin.com/DA. Letstalkbitcoin.com/DA will direct you to the white paper. David Johnson, Ron Gross, thanks very much for your time. I look forward to seeing your continued progress in the space as we move forward towards this future of decentralized applications.
Thanks for having us. It's been a pleasure.
Thanks, Adam. I really enjoyed it.
Thanks for listening to episode 64 of Let's Talk Bitcoin. Exploring Distributed Applications was produced by Adam B. Levine, edited by Matthew Zipkin, and featured David Johnson, Ron Gross, and Adam B. Levine. The Millibit Moment was produced and edited by Adam B. Levine and featured Stephanie Murphy, Andreas Antonopoulos, and Adam B. Levine. Music was provided by Jared Rubens. Questions or comments? Email Adam at letstalkbitcoin. Have a good one.